Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, today's episode is brought to you by Chase Hanna.
Ooh.
So for our viewers and listeners who don't know, Chase Hanna is one of the local Kansas City pro golfers that we are proud to sponsor. And Cory, I don't know if you saw this or not, but Chase was basically in risk of losing his European tour card. So he plays in Europe. And he had an amazing fourth round. He shot around 66, I think, and got into the top 10 or something. And he locked up his tour card. This was the second to last tournament of the year. So you want to talk about pressure, Cory. These guys are playing for a paycheck, and he needed to perform, and he did. So I'm super happy for Chase. We're very humbled to be able to give him a very small sponsorship to help him with, hopefully in the pursuit of his goals. Got anything to say about that?
Yeah, if there's anyone who's watching or listening out there who's interested, fans of golf, Chase also joined you and I on episode number 236 of Upticks, Jake. So I would also, if anybody's interested, Chase joined us for about a half an hour conversation not that long ago, earlier this year.
You know, and one thing I like about Chase, Cory, when I meet with him, I'm hopeful that he's going to come back here for the holidays and I get to see him, is it, and I'm a little biased, obviously, but most golfers are smart. But Chase is like really smart. Like when I sit down and have lunch with Chase, he's very intelligent. Graduate from KU. Don't hold that against him, MU fans. But he's a smart guy. And, he's just emotionally intelligent. He's married. He's got a good head on his shoulders. And so just about world and world views. And I think probably, Cory, he's learned that traveling all over Europe. But he's just very cultured, very intelligent guy. So certainly he's an easy guy to root for. And we couldn't be more happy for him securing his 2024 tour card.
Excellent.
Cory, what's new with you?
I spent some time last week back on campus at my alma mater at University of Central Missouri, or Central Missouri State. It's had a lot of names actually over the last 150 years, but I was back there on Thursday afternoon and Friday for our semi-annual board meeting.
Hold on.
Yeah.
So your school is how old?
150 years.
Golly, that's crazy. That's an old school for this part of the country, isn't it? I mean, we're not talking about New York here or
1871.
Wow. That's pretty legit, Cory. So what were you saying?
Yeah, so I have been on the board for the Alumni Foundation at the University of Central Missouri since 2019. And I usually get back to campus twice a year for the semi-annual board meetings. Very much enjoy doing those in person. And I have the privilege to be the chair of the investment committee for the endowment and the foundation also. So it's a productive and enjoyable experience. And it's good to just be in that environment and strategize. But also a lot of what you and I talk about on this show, Jake, and what we talk about with clients every day is very applicable there as well.
Yeah, good for you. And I bet that's cool. You know, I'm a long ways away from my college, so I don't get down there very often, but I could see where, I don't know if I would want to, I went to school in San Antonio. I don't know if I'd want to live in San Antonio and be that ingrained in my alma mater. So I think you've got the best of both worlds, that you're close enough you can drive down there, relive some of your memories, but be an adult here in Kansas City.
Yes, so I could get there and get back in about an hour in each direction.
That's pretty cool.
Took me back to my roots when we first started working together, Jake. Driving
That's
up
right.
And down the highway.
For those that don't know, Cory interned with me, and he used to drive in from college. That's one of the ways you earned our partnership, Cory. So thank you for that.
Thank you. All I had to do was drive.
That's right. And thank you to all our listeners and our subscribers. We continue to grow that count. So thank you so much. Please give Upticks a thumbs up, like, and share our content. We are doing this to enhance financial literacy. And by recording a 30-minute episode, we are able to do that at scale versus having hundreds and hundreds, if not thousands, of conversations. So again, we're certainly here for our clients, but we want to enhance overall financial literacy, and that's why we're recording this show. So thank you again for tuning in. All right, Cory, let's jump into it here. So my first headline today is downsizing your home isn't the money move it used to be. And this article talks about, Cory, trading to a smaller home has never been just about spending less money. People move to smaller homes to make their lives easier, to be closer to family members, or to eliminate maintenance tasks as they age. But with mortgage rates pushing 8%, a meager supply of smaller homes for sale, and steep prices for the few that are on the market, the math doesn't work in many retirees' favor. So my question to you, Cory, is if this was a client saying, Cory, I want to downsize, I've got a big house on a big lot, but now mortgage rates are double what they were just a few years ago, and prices are up 20, 30% or whatever. What do you tell someone, Cory, that's dealing with this? It's a real problem.
Yeah, I would tell someone who's dealing with that to really evaluate what the financial impact of selling their house and buying another house is going to be on their financial plan. Because I think the price that's involved for each and every person can be very subjective in terms of what is a fair price or overpriced or underpriced, whatever it might be. But really, where does it fit everywhere into the financial plan? Because presumably there's never going to be a perfect time. But I recognize some of the challenges that are there right now because I do have these conversations with clients. What about you?
Yeah, really good. I think two things is one, don't get caught. And again, this is not advice. I agree with you 100%.
Yep.
Go back to your financial plan, meet with your financial planner, and let's crunch the numbers. You know, you have a house that's worth $500,000 and you want to buy a house that's worth $400,000, or you want to mortgage it, or you want to pay cash. Let's crunch all those numbers. But I wouldn't be overly concerned about the mortgage rate. I know 7 or 8% is high, and I don't have any idea if they're going to go down or when, if or when. I would assume, though, that the pendulum will swing back at some point. And so the argument would be, let's focus more on price than the rate. So you could use these higher mortgage rates as a negotiating fire to say, hey, you know, I'm going to buy your house for 400 grand, but my mortgage is going to be higher. Can you sell it to me for 350? So maybe you can get a good price and then stomach that higher mortgage rate for a few years, and then hopefully rates swing back. But again, there's no guarantee there. The second thing, Cory, that I think is a great idea, and again, for some people, certain people, is to rent. So if you want to sell your big house on the big lot, maybe you go rent for a couple years. And what that does is that gives you ultimate downsizing, because now you're not worried about your roof. You're not worried about any yard. You know, you've got a landlord that will take care of all those things, hopefully. And you can really, really see what you want in another property. You know, go rent a townhouse, go rent a house, whatever, a condo, an apartment, and see what you like and what you don't like. And look at this as an adventure, as an opportunity to roll the dice a little bit and shake up things. And then ultimately see what you want to do, and then maybe settle down and anchor down in something a little bit more permanent if you found a particular location and price point.
All right. I'm going to jump around a little bit here, Jake.
All right.
And I'm going to move to the second article I wanted to talk about today, but it's just so closely aligned with what we just highlighted. And this is from the Wall Street Journal. There's never been a worse time to buy instead of rent, was the headline here. And the point that they were really making is that the cost of buying a home versus renting one is at its most extreme since at least 1996. And the average monthly new mortgage payment is 52% higher than the average apartment rent, according to CBRE analysis. And again, in theory here, the cost should be roughly matched between owners, between owning and renting, because obviously owners are going to invest more cash and have more expenses, whereas, someone who's renting is not going to have those same expenses. But what I really found interesting in this, Jake, is to your point about home prices and also about interest rates, is that a 30-year mortgage today on a $430,000 home with a 10% down payment results in $3,200 a month in repayments, 60% more than if the same house had been purchased 3 years ago. And rents have risen by 22% in the same time period.
Well, that's huge, right? So you're telling me mortgage payments are up 60% and rent is only up 22%, which are both high. But I agree. So good article, Cory. I know you jumped through the doc here that we had things saved, but so again, I'm not opposed to renting. A lot of people say, oh, you're throwing money away, blah, blah, blah. But, I rented, Cory, and a lot of our clients know this, is that I rented into I think I was 34 until I bought my first house. And I again, I have confirmation bias maybe because looking back, I felt like it was a great decision that by renting, I was able to save a lot of money to put more on a down payment for a nicer house than I could have afforded in my 20s. And so same works for a retiree though, right? So you don't need to worry about buying a house necessarily, as long as, most importantly, that financial plan continues to be in good order. So good one, Cory.
Yep.
How about this one? Americans failed to pay a record $688 billion in taxes. $688 billion. The IRS says that will change. So I think they're putting the hammer down, Cory. Basically, the IRS has come out and said they're ramping up audits on high-income taxpayers and fighting to keep funding it got in the Inflation Reduction Act to improve taxpayer service and increase enforcement. However, a recent bipartisan deal ratcheted that funding a little bit. There's a quote from the article by Melanie Krause. She said, the additional staff and hiring at senior levels is really a critical aspect of being able to expand our coverage. Basically, there's also another good point here, Cory, that I want to hear your thoughts on this, is that the agency is also preparing for an onslaught of additional reporting from gig workers. So this is like Uber drivers or Postmates and entrepreneurs, that there's new rules that you reporting income through payment apps that take effect this year in 2023. And it says that taxpayers are more likely to comply with rules when there's a third-party information reporting earnings and withholding. If people know the IRS has that information, they're not going to underreport it, says Natasha Sarin, who is a Yale law professor and former Treasury official. Cory, I want to hear what you thought, and then I've got a little quick rant to go on about this.
Almost $700 billion is a lot of money to not collect in taxes. I think the IRS beefing itself up to operate better is a positive, at least in theory. How that all plays out, time will ultimately tell. But the fact of the matter is, what this really tells me is that there's a lot of different people playing a lot of different games. And if there's $700 billion in taxes that didn't get collected, that's what the IRS really wants to enforce on. But my takeaway from this is, if you're paying your taxes appropriately, it's not an issue.
Right. Well, you're right for the individual. But first off, shame on the IRS. If any other corporation failed at collecting revenue in the amounts of $688 billion, I'll tell you this, the CEO would be fired, there would be layoffs, there'd be shifting, and there would be major, major, major changes going on at that company. So shame on them. And then two, Cory, shame on all these people cheating system. Now, again, I don't like paying taxes either, right? But when you don't pay taxes, you're stealing. And I don't steal, right? So you can try to rationalize and justify it, and I get it. I think the government wastes our money and blah, blah, blah. You can go on all about that. But the law is the law, right? And so, again, we can't have anarchy and people just don't pay taxes, then we don't have government, then it's all crazy. So to be a responsible citizen in any community, unfortunately, you have to pay your taxes. So shame on the people that aren't paying, and shame on the IRS for not collecting. It's stupid to me, but they're not asking me. So it's crazy, but hopefully they do a better job.
All right. Next here, this is from LinkedIn. Work from home rates have hit a post-pandemic low. So Jake, only 26% of US households currently have a work from home member, according to a Census Bureau survey. So 26%, which is down from 37%, a peak of 37% in early 2021. Firms have cited in-person collaboration as the main driver behind the push, but analysts have also pointed to remote work's negative impact on commercial real estate and urban businesses. So I'm curious, Jake, I'm curious your opinion on this, but also I'm curious if you think that this is something that could end up actually being a market story, an investment story around the way that different companies operate, whether they have people at work or not at work or in hybrid roles, and what that really means for productivity.
Yeah, I've said this for a while now. I believe certain roles and positions can be more effective remotely. You do miss out on collaboration and training when you are virtual. Me personally, Cory, and I think I could be speaking for you, but I think you agree because you and I came in during the pandemic. I have to put on the suit and come into work. I just like it. When I'm home with Rachel and Einstein, when I'm at work, I am with you and my clients and my team. And so um, I like to see that number trending down. I think that our society suffers from lack of community as is because of social media. And I think working in person with other humans and having to say hello and good morning and be polite is a good thing for our society and mankind, all humans. So will this be a market story? Probably. I think, like New York got pounded, commercial real estate wise in the pandemic. I think it'll come back. And I just think companies, though, will pivot and adjust. I think workspaces will change. I think, again, some people can work remotely. I think it's a good because I think it opens the doors up a little bit. So hopefully what comes out of this, though, Cory, are more productive and happier people and more efficient and effective companies. But again, I don't think it's one or the other. I think it depends on your role because I have some clients, Cory, that have done the same job for 20 or 30 years, and they're like, I don't need to go in to do my thing. And I was like, I get it. That makes sense.
Yeah.
Makes good sense. You don't need to go in. But, that 23-year-old that doesn't know anything and they're living in their apartment downtown and they don't, that's hard. I don't agree with that. So.
Yeah, and I just don't think it's a zero-sum game where it's everybody
Right.
works from home or everyone returns to the office. It's somewhere in between. But I just thought it was, we've seen that continue to trend lower over the last 2 years, which if we just take a moment and rewind 2 years, people didn't think that was going to happen. Right. Everybody thought everybody working from home was going to be the new normal.
Right. And I'm glad to see people, some of these CEOs have been a little bit jerks about it, really pounding the table. But I think it's okay to ask people to come back to the office. Our team certainly collaborates very well, in my opinion, working in person. So,
absolutely.
And we didn't have to force them, which is good too. We didn't have to force
anybody. Right. That's a big part of it.
Right. All right, Cory, I got one here for you. Want a discount? Pay in cash. This article by the Wall Street Journal says that retailers are nudging us to use cash in two main ways. Some impose surcharges if you want to pay by credit card. Others offer cash discounts, but these deals might not be as good as they seem. So, two quick pet peeve, Cory. I hate it when I'm going to buy something and someone asks me, can you pay by cash? If not, I'm going to charge you 3% more surcharge. I don't like that. Like, that's the cost of the business doing business. I frankly don't think they should try to make the consumer feel sorry for them. I just don't like it. But what this article said about the other cash discount was really shady. So you know what some of these companies are doing is saying that you get a discount on if you pay by cash. So let's say you have a restaurant, Cory, right? Let's say you have a restaurant and the online menu says the soup is $4. But you go pay in cash in person and you say you get a discount if you pay in cash, it's $4 is what they're saying. And the fine print basically says the $4 is the discount. And if you pay by card, then they mark it up. So it's misleading. My point is they're tricking people into saying pay by cash. Oh, by the way, that's the price. It's already been discounted. They're not actually giving you a discount. They're just saying it is. And then they're marking it up.
So they're advertising the cash price, the discounted cash price.
Yes, exactly. So they're basically imposing a surcharge is what they're doing if you use a card. What are your thoughts on this?
Yeah, that's shady. That's a shady way to go about doing it. I understand why businesses want more people to pay in cash because of the transaction charges that they have to incur when they do it. But I agree with you as far as, that being a cost of business. But I think there's a lot of things that people can do individually too. Like, for example, I don't know if this is going to get me a discount, Jake, but what I try to do if I have a meal out at a restaurant is I'll typically pay with a card, but I'll tip with cash.
Why do you do that?
Because the conversations that I've just had with enough people that work in that industry that they would prefer a cash tip.
They're part of the 688 billion not reporting it, Cory.
Maybe, probably.
So you could be influencing this bad behavior.
Well, it's I guess my perspective on it though is that industry has had such a rough go of things the last few years that now more than ever, I appreciate going to a restaurant for a meal and having a server or a staff that is just attentive or clearly just at least cares about the experience, because that has been a challenge for so many retail places and restaurants the last few years. Staffing looks totally different than it did 4 years ago. And I just think that that is underappreciated sometimes.
So
But I
you
do
don't think
think
they should have to pay taxes?
But I do think they should pay their taxes.
Come on, Cory. I get it. And I was going to ask you, so is that the only time you use cash?
For the most part. I mean, I
Yeah.
carry cash and I keep some on hand, but I just don't actually use cash for transactions very often.
Yeah, I'm like you. I don't tip my server with cash, Cory, because I do want them to pay their taxes. But I will tip other, like if somebody's delivering furniture, I'm not typically paying with a credit card. So I'll keep cash around to tip the delivery guys. That's a hard job, right? Or whoever, right? So I will tip people where I'm not transacting business with them in that moment. So I'm like, hey, thanks for doing this. Here's a tip. So that's why I kind of keep it, but I don't really use cash much. I'll even pay the surcharge. I don't know, I get points. So I think that lowers the surcharge a little bit because I get, some cash back through my points. But again, I just don't, we at Falcon Wealth Advisors, we pay a lot of fees for our vendors and we don't charge that back to our client. We have a good theme here internally. We say, look, that's the price of us doing business. It's not our client's fault that we have to pay for financial planning software, right? Or tax planning software. It's not our clients shouldn't have to pay those fees. If we want to offer those services, we got to pay for them. So that's why I think all businesses should do it personally. So anyhow, what's next?
Correcting misperceptions about Social Security's fate. And this is from the Center for Retirement Research at Boston College. They really posted about a study that the National Bureau of Economic Research did. And there's two charts here, Jake. I know you love the charts, so we're going to be able to show those. We're going to be able to show those up on the screen. But this is really just talking about the misperceptions around Social Security, because once a year, Social Security reports on the program's financial outlook, but the bottom line doesn't change, which is that the reserve in the trust fund is running out of money. But a lot of workers and retirees inaccurately assume that means when those reserves are depleted, Social Security is gone. What I found so fascinating about this is literally presenting the data in two different ways completely changed people's perception about what a reserve in the Social Security Trust Fund looks like. And it also was helpful to educate people that the only way that Social Security truly runs out of money is if no one is working in our country and no one is paying payroll taxes. Payroll taxes are what funds it. And as long as people are continuing to work beyond 2033 or 2034, whatever the most recent estimate is, there's still money that's flowing into it. But I just thought it was really interesting to see the
It sounds like a Ponzi scheme to me, Cory.
Yeah, interesting.
I like
what
this.
What do you think about that?
Well, no, I like it. Let's explain. Let's talk about your charts a little bit.
Okay.
So this first one, this trust fund reserves, looks like a bell curve.
Yes.
And you're right, Cory. This chart is painting negativity on our screen here.
Yes.
And you're right. It's the same data, right? On the second chart, the green line are revenues and the blue are benefits paid. And I guess the point is, if you go to 2034 on this chart, there's more benefit paid than revenue, but that doesn't necessarily mean it's out of money. Again, they could just change the revenue. Like, we need more revenue, so we've got to raise the tax on it or whatever you want to do.
Which is what happened last time. It's exactly what happened last time. So what
do you mean? What do you mean? What happened last time?
When the last time that the Social Security Trust Fund was really in dire straits in the late 70s and the early 80s is when taxation of Social Security benefits was introduced.
Interesting.
Yep. Yeah, back in
which
the
is
early
stupid,
80s.
by the way, which my clients typically hate. Strong word. It's dumb. So I agree with them. But you're right, though. There's small changes they can do to impact it. And again, Social Security is the largest, in my opinion, one of the largest Ponzi schemes ever run. And but we pay into it, so we should get our money back out of it. So I'm not saying that it's necessarily a bad thing. I just think it's been mismanaged. And again, the government for you there on that one. So don't get too cynical on it. Again, the government overall does a pretty good job. If we don't have it, I'd much rather have a government that I can knock on, Cory, than anarchy. So
fair.
Good. It's good. All right. You know what? I brought a chart out this week too, and I think this is our last one today, as we got to wrap up here. But it says, this is a good one to end on a good note here today. Expectations are high for earnings season. And this is by Yahoo Finance. And it says S&P 500 earnings are expected to rebound in back half of 2023. So they go on to say, as our chart of the week shows, Cory, analysts expect the corporate earnings decline we've seen over recent quarters to be over. And more critically, they expect earnings growth for Q4 and beyond to be up 9% and then into the teens. And I'll tell you why this is important, because ultimately corporate earnings drive market growth. And so you've got horrible things happening with wars and battles and inflation and House speakers and politics. But the fundamentals, Cory, with the market are about earnings. And if a company is earning more or growing their earnings, then by definition, they're worth more. And so this chart gave me a lot of inspiration. Don't get fooled here, Cory, though. I'm not saying I'm going to predict the future, but it is a good sign that expectations are positive. But again, this all could be completely wrong. And so I'm not saying it's predict the future. I'm just saying it's a good signal that there's some optimism in the marketplace. And I like that. I like to see that.
Yeah, it's good. You highlighted it well, Jake, that earnings are really what drives things over the long term. And that's easy for people to forget.
It is easy to forget, right? Because, they only happen 4 times a year. And so we have all this noise in between earnings and people get freaked out. And rightfully so. I get it. It's their money, it's their nest egg, it's their retirement. I get it. It's a very serious subject. I always go back to earnings with clients. Always. It's all about the earnings. The company's making more, they're worth more. Period. It's that simple. So we try to invest in companies that we think are going to grow their earnings. Right?
Yes, long-term, yeah, compounding companies that grow their earnings have done, and there's a lot of companies out there that have done this for decades or even centuries, to and through different economic cycles, and that's what we're looking for.
Yep, and that's what clients hire us for. So good way to wrap it up. You have any closing remarks as we wind down today's episode?
I'm glad that you're inspired, Jake. I thought I was going to get you to give us a prediction for the future, but we didn't quite get there. But I do think the closing thoughts from really all of this here are to just our intent is to keep focused on the big picture and to keep everybody focused on the big picture, because right now there's a lot of noise. There's a lot of things that are happening. There's a lot going on in the world, and we certainly are not oblivious to that at all and are dialed into it. But we want to keep our eyes on the big picture and remember that the first step is establishing the plan. The second step is sticking to it.
Oh, I like that, Cory. Good one. And the article had a prediction, but I didn't talk about it because I didn't want to give it too much credit. So good. Thank you for the charts, and thank you all for tuning in. As always, if you do have any questions, simply email service@falconwealthadvisors.com. Our team of professionals are here for you. Thank you again for joining me, Cory, and thank you all for tuning in. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.